This is the best trade in crypto right now. You can purchase Ethereum right now at a 13% discount is by using Grayscale Ethereum Trust, ETH. You can do this on most stock exchanges. You can do this in your 401k or Roth IRA if your brokerage allows it. Currently, the discount is 13.6 of net asset value. So what is a Grayscale Ethereum Trust? The ticker symbol is ETHE. So Grayscale Ethereum Trust is one of the first securities solely invested in deriving its value from the price of Ethereum, ETH, that enables investors to gain exposure to ETH in a form of security while avoiding challenges of buying, storing, and safekeeping ETH directly. Shares are designed to track ETH market price, less fees and expenses. Now, here are the numbers. There's very few to keep in mind. First of all, the entire trust is divided into 310 million shares, 158,500, but let's just call it 310 for now. Each share's price is this much Ethereum. So Ethereum divided by a share. Okay. This is the assets under management, 6 billion, 0.6. We can call that 6.5 billion to speed up the math. According to that, if we do the math, the price per share should be worth $21.50, but currently it's about $18. So the discrepancy between 21 and 18 is the $3 discount, which accounts for 13% from the 21. Okay, let's do the math together. There are 310 million shares. This is how much each share is worth of Ethereum. So if we take the shares and divide it by how much they're worth of Ethereum, this is how much Ethereum the trust hypothetically should own. Okay? If the current price is 2,200 multiplied by this many Ethereum, then we get the net asset value, which is 6.5 billion. The number on their website is 6.676, but I'm sure this is because of a lag in their price feed. Either way, if you divide the net asset value by the number of shares, so the 6.5 billion divided by 310 million, you get 21.27. That is the discrepancy because currently the price is 17.85. What does this mean? Well, what will happen is Ethereum ETH ETF trust will be converted to a spot ETF. A spot ETF typically refers to an exchange-traded fund that tracks the spot price of the underlying asset. The term spot price refers to the current market price at which the asset can be bought or sold for immediate delivery. In the context of ETFs, this usually involves commodities or financial instruments. The reason this is important is because currently there is no way to redeem your shares for Bitcoin or for ETH. Once this redemption is enabled through a spot ETF, then this discount of 13% for Ethereum and 7% for Bitcoin will disappear. So how do you make money off the spot ETF conversion? Well, the first one we already discussed, which is the discount. The discount of 13% will be erased. And you get that free gains. Number two is looking what happened to the price of gold when the first spot ETF of gold was launched, which is very interesting. Here's the chart. First gold ETF was approved in 2004 in November, and then price shot up 350%. From that point on, it was kind of flat in the beginning, but then it just took off. What will this imply for Ethereum if it went up 350%? Well, at the current price of 2,200, a 350% gain would make each Ethereum about $10,000. So this is from here to here is about 350%, making it $10,000. How could we make a hypothetical trade to figure out how much we will profit? Well, if we were to buy 100 shares of Grayscale Ethereum Trust, now feel free to plug in any number you like. We're using the number 100 just to make things easy and simple, but you can buy one share. You can get 10, 100, 1,000, 10,000. Up to you how much you want to invest. So if we were to do 100 at $1,785, that would be $1,785. But we would capture about $2,100 of value based on the conversion. If converted, we would profit $305. Just think of that $3 difference between the value of the assets relative to how much each share costs. That's the $3 times 100. It's about $3. If we did the same math for 1,000, your profit would be $4,500. Now, it is a 30% discount from 2,100 that it's currently at. But if you're looking at the gains, the $300 is 17% gains on the 1,700 invested. So the 13% discount is actually a 17% profit. Also, if you were to buy this now and the price of Ethereum goes down slightly, so you're able to gain 17% extra profit, or in reverse, if you think about it, you're protected by a 13% discount on the way down. So you can afford for Ethereum to go down 13% and you would still not be in a loss. You would break even. So you have a 13% buffer to the current price. Think of this as downside protection you get for free by going the route of the ETF. Okay, so there are a few important dates to keep in mind that are some closer, some further away that are coming up in 2024. First one is the Bitcoin ETF, Spot ETF, is expected to be approved in early January. This should erase the discount on the Grayscale Bitcoin Trust, and then we can use that as a model for Ethereum. Especially in the last few days prior to the Spot ETF, we can see what happens to the price of underlying Bitcoin and how we may use that knowledge in what will subsequently happen with the Ethereum Spot ETF launch. Following the BTC Spot ETF, Bitcoin has a programmed halving emission schedule. What this means is every 10 minutes, the Bitcoin network rewards the miners who are securing the network and validating transactions by creating new Bitcoin. Every 10 minutes, 6.25 Bitcoin are created. Now, this block reward gets halved every 4 years. So this time, it will be cut from 625 to 3.12 or whatever that comes out to. Meaning that the sell pressure from miners who are using lots of equipment and lots of electricity to produce these blocks and the mining rewards, that sell pressure on the market will be cut in half. Miners have to keep paying for their electricity and updating their equipment so they can stay in business. They are a constant market pressure that will be reduced at the point when the halving happens, because they will create only half as much Bitcoin every 10 minutes or just for the whole year. Next time this will happen afterwards is in April of 2028, when about 3 Bitcoin per 10 minutes will be cut in 1.5. This reduction of inflation goes on every 4 years. It is programmed into the network, and it will keep happening in perpetuity until all 21 million Bitcoin are exhausted. After the halving, which is usually a very positive catalyst for both Bitcoin and the crypto industry in general, we're expecting a ETH spot ETF to be approved sometime in the summer. So maybe late May or in the summer. This is where this discount on the Grayscale trust will be realized, where you can get your 17% gain from the current investment. And then by the end of the year, usually 6 months after the halving, is when the full-on bull market occurs historically. This may not happen, or it may happen differently with different time, especially because of the spot ETFs that are also happening this year. But don't be surprised if we see all-time highs hitting new records. Next thing to keep in mind is crypto has a strong community, and over 50 million Americans have interacted with blockchain and the crypto. But we are under attack from certain industries, especially traditional banking industry and senators that are probably very invested in the traditional finance, like Elizabeth Warren. So please call your Congress. And lastly, if you are in the United States, I hope you will stand with crypto. This is ran by Coinbase, standwithcrypto.org. I will put the link in the description below. This is an easy to use website where you can quickly find a way to call your congressperson, email them, or other ways to support crypto by donating or minting an NFT. So to get started, you just click, and if you put your name and your zip code, your phone number and email, it gives you a script that automatically will send an email similar to getting started with a phone. It will help you find your congressperson and give you the number so you can dial, and a short script where you can ask them to support a positive legislation for crypto and stand against negative legislation that is trying to ban crypto in the United States. By passing positive legislation, we can de-risk the entire industry. There's a lot of money on the sidelines, especially institutional money, that is hesitant to invest in this asset class because they are uncertain about the regulatory and legislative uncertainty in the United States. If we can de-risk this, then more capital will flow into this asset class. So do your part, call your congressperson, email them, and donate if you can. Coinbase just published their 2024 crypto forecast, and it's an interesting read. I'll link it in the description below. Also, we had a chance to listen to their institutional markets call. They have interesting things to say about Ethereum lagging the market and the possibility of Solana overtaking Ethereum and their excitement about the Spot ETF. Let's take a listen.
Institutional perspective, if you miss an ETH rally, that can literally be a career risk, right? Like if ETH appreciates and you're benchmarked to it, you can't explain to your investors why you didn't have ETH. Whereas if you're looking for the next big thing for institutions who might be moving down the risk curve, if maybe they missold, they have other options, but you can't really miss the huge kind of opportunity that ETH presents, especially when you have something like a BlackRock Spot ETH ETF application on the horizon, for example.
Yeah, I think that's definitely right. I definitely share the sentiment with regards to ETH versus BTC. It's definitely been a BTC-led market this year, and as we do see the news start to evolve into kind of focusing on ETH ETFs, we would definitely expect that to mean revert.
Greg's take on, we're hearing from more clients about, people who missed out on Solana, thinking that from an institutional perspective, is there a place for Solana to kind of start overtaking ETH? And that I'm not as certain about.
Yeah, I think that's going to be tough, given Solana's been called out as a security by the SEC. Until that's settled, I would expect, institutional flows into that token to be, light at best. ETH, on the other hand, has been sort of ignored this year, as a lot of the institutions have focused on Bitcoin because of the the ETF timeline. And then, as you said, a lot of the crypto native folks have moved out the risk curve into Solanas and the AVAXs and whatnot. ETH to me seems rather underowned, and I think could surprise to the upside in 2024 as the institutions get their allocation to Bitcoin and then look at what else is out there. And we know that it's possible that an ETH ETF follows the Bitcoin.
Well, good news, gang. While I've been recording, the discount on the Grayscale Ethereum Trust went up to 14.5%. There's a few things you can do here when it comes to the Ethereum discount trade. You could, if you were going to purchase Ethereum anyways, just buy the Ethereum Grayscale Trust and wait for the conversion. Once that happens, you can convert it to Ethereum, take ownership of it, put it in your cold storage, or stake it to earn a return. There is no reason why you should be paying the 2.5% management fee to Grayscale on something that should be free. In fact, if you keep it on Coinbase and you stake it, you can earn close to 4%, where they will pay you because you'll be helping validate the network. Now, you can think of this as a swing trade. And as soon as the Grayscale Trust gets converted, you can take your profit. Now, if you're planning to do this, I highly encourage you to do this in a tax advantage account, like your 401k or your Roth IRA, maybe your HSA, if you have access to those. The reason is if you sell within 6 months, you will incur taxes that are short-term capital gains, which are around 30%. If you hold this for over a year, then those will qualify as long-term capital gains and you'll only pay 15%. Now, if you do this in your tax advantage account, you won't pay any tax now. You will when you withdraw, when you retire. If you're planning to do this short-term, highly recommend you do this in your 401k or your Roth IRA. If you're in your Roth IRA, it is after-tax money, and you won't pay any taxes after. So think carefully which account you're going to do this in, if you're going to do it at all.